Hey everyone, it is Evan here from the Trade Risk on Tuesday, June 25th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. Now, a quick programming note, this will be the last time you hear from me for the next 2 weeks. I'm doing a little bit of traveling, a little vacation time, get away from the screens. So the weekend videos for this Friday and next Friday will not be going out. I'll be back on the second week of July, back to the regularly scheduled program. It's possible I might do a quick midweek update if time allows, if I have some downtime. But for sure, the weekend videos this Friday, next Friday, will not be here. So keep that in mind, and I will be back in a couple of weeks. Enjoy the 4th of July holiday. We got some downtime in the markets next week as well. So if I don't talk to you, enjoy the holiday, and I will catch you on the other side. Now, let's talk about today's markets and this week's markets. We've got some selling pulling in here on Tuesday. You can see the major indices all finished lower by about a 1%. The Q's down almost 2% on the session. 5-day change numbers back in red. And just like that, we have a little more red creeping in here. We're below the 10 SMA now in 3 of the 4 major indices. And if we scroll down to the major sector, or to the US sectors here, we do have a more kind of sprouting out here to the downside over the past 5 days. We have healthcare, utilities, and staples, very defensive tone of the market with those sectors at the top of the list. And on the downside, we have transports, discretionary, and financials underperforming to the downside. If we go to the major markets here, we got volatility, top right, top performer 8%, followed by oil and gold. And on the downside, we have natural gas, the dollar, and the S&P 500. So let's take a look here at what's going on. Let's switch over to this view, and we'll go to the weekly time frame, which is what we're on now. Each bar represents 1 week worth of trading. This is the cash S&P 500 market. Now, what you'll note is last week we all were celebrating doing our victory laps that the S&P 500 broke out and closed at new all-time highs, but we're not getting the reaction or the follow-up that we ideally would have wanted to see to really support the bull case. Now, it doesn't have to be the end of the world here, but what you'll notice is we've just done a quick kind of abrupt push back down below that 29.55 area, which were the prior highs from April and approximately the highs from 2018 August that the market was attempting to break out from. And we got that new closing weekly high, and now we're pulling back in and kind of retracing back into the middle of this of last week's range. So going forward, what we're really looking at here, and it's time I adjust this here to about 29.55 or so, that's going to be kind of the upside level we want to see the market reclaim to start getting excited about the uptrend here again. To look for trend continuation, to look for momentum to the upside, the market's going to have to get back above 29.55, which is approximately where we closed last week, and again, the prior all-time highs. So as long as we're kind of below here, again, it doesn't mean it's the end of the world at this point. It simply means that the market's kind of digesting, pulling back, and kind of filling in on the fast move that we saw to the upside last week. And what we'd be looking for going forward here is some type of higher low to get put in, and then a push back up and a reclaim of 29.55. That is the ideal situation. That is the bull prime outlook there. Now, if that doesn't happen, we look to 28.72. That's going to be our next middle reference point that we're looking at here, and that's going to be the point at which we would want to see buyers step in and support this market. And if they don't, then we kind of go to the next level of support to start paying attention to, is that key psychological nice round 2800 level. So for now, the market's kind of in this pullback stage. Again, it's only Tuesday. We're looking at this chart with 4 days or 3 days left of trading left. So this weekly candle could find a nice bid over the next 3 days, and suddenly we have a follow-up week if we can continue higher here. That's a possible scenario. Now, what's not so pretty here is the Russell 2000. This is where Again, not new news here, especially if you're following our recaps. This is where we've still been continuing to find underperformance is in the Russell 2000. This is predominantly dominated by small cap stocks, smaller companies. And for the Russell 2000, what we see here is in fact that we're already taking out last week's lows. So this to me is, again, more sort of caution signs, at least in the short term, or at least a little bit of warning here that the Russell 2000 is throwing and indicating to us. We in fact almost have, we're almost taking out the prior 2 weeks lows at this point. And again, it's only Tuesday, so this weekly candle can look a lot different come Friday. But if it does close below last week's lows, back below this shorter term action area here of about 151, then I think that's going to continue to pressure the overall market. It's going to continue to keep us somewhat defensive here in the small cap space. And if you're an active trader, this is probably where you feel it the most, is because most active traders are typically going after the higher beta stocks, the smaller companies. And when you have the Russell 2000 underperforming like this, or selling off 1.84% in 2 days, you tend to feel it in those types of higher beta stocks. I know for me, certainly in the swing trading that we do, we got stopped out of a few names today, and really just kind of adhering to this pullback here if you're a shorter term active trader. So for the Russell 148, that's the near term reference point. Again, that's approximately the pivot low here from March. And again, we made a low all the way down here around 145. But really, it's kind of the same old song and dance here, where the IWM is just stumbling along sideways, pretty messy, all things considered. The S&P 500 is, acting well. The Nasdaq had been acting well until today. The Russell 2000, again, this is where we want to pay attention to. We really want to get above last week's lows. We want to reclaim above 150, call it 2. If we can close the week above 152, then the bulls save some face here for the Russell 2000. You can see that MACD still in negative territory, but really close to about a flat line there. And finally, if we go to the Nasdaq 100 here, you can see this very much is pulling back into last week's range again. Let's go to the daily chart of this one here, and you can see we did get a bit of a range expansion, some underperformance, particularly in Nasdaq land today. Volume was coming in right around average, and you can see we're gunning for this open gap, almost filled it back here from the Tuesday, the 18th, that we gapped and kind of pushed higher. So we'll see if bulls can kind of step in here maybe after we fill this gap, looking for a bid, looking for some type of higher low. That's what we want to see here across all markets. But, in the Q specifically, ideally it occurs over 182. If we can hold above 182, that's certainly going to be the ideal spot there, but we can clearly see that for the Nasdaq 100 anyway, we failed to make a new all-time high here just last week, and now we're starting to pull back below the April highs. Now, go back to that S&P 500 chart again. Remember the SPY ETF, if you're looking at that, just went ex-dividend, so this chart's a little more skewed to the downside than the S&P 500 cash, so I do like looking at the cash market here. And again, when we look here at the daily chart, the big relevant or the big elephant in the room here is the loss of this 2955 area, which was or 2954, whatever it exactly comes out to, but essentially losing the prior all-time highs we briefly tried to make up here. We're starting to pull back. Notice there's an open gap here that fills all the way back down closer to the upper 2800s, and then we have that 2872 area here, which really does open up and puts this as a very reasonable spot for the market to come back and retest and fill in here around this 2872 area. That's where, again, you'd want to see the bulls step back in. The last thing I'll note here, though, on the daily chart for the S&P 500 is I like the MACD that it pushed to new multi-month highs here, and it's starting to pull back. So there was a good surge of momentum to the upside, and we're starting to make that pullback now. That is, to me, generally a point of strength in which you have a new momentum high made, and then you're starting to pull back. Tend to get buyers that are more interested in those types of pullbacks and dips, but of course, we'll have to see how this all plays out in towards the end of the week. So all in all, we have markets pulling back here in the short term. Depending on your time frame, it may or may not matter. If you're a short-term active trader, then you feel the pullback and it's maybe something you take notice of and pay attention to. If you're longer term, then this probably is really just a drop in the bucket, and you're not really that worried about this until we start breaking bigger support areas. So that is the major markets. Let's look at some of the other those are the major indices. Let's look at some of the major markets here. TLT, you can see, is gaining this week, up 1%, back up towards the highs here. Remember, we talked about, the fact that this kind of rejected here on Friday. Talked about a lot of the excitement and chatter, I think, of people looking to short this market. Still, to me, seems like a difficult proposition. There is some momentum divergence going on here to the downside, negative divergence based on momentum, but this trend is still pretty strong. And especially if we are going to get some more equity weakness now, this could still act as some type of safety haven. Volume profile here has been very strong on the upside days. So bulls still have the upper hand. They're going to need to basically take out. You get a good reference point here. If we can follow through to last Friday's lows around 131, 131.50. If we start taking those out, then you get a more reasonable chance to pull back here into the lower end of this mid 120s. But we'll have to see how this plays out. It could fail here again and give you another give you another tactical short opportunity. It just really depends on how active and what you're looking to achieve for TLT. Overall, trends are still holding up with a little momentum divergence. Now, if we go to metals next, GLD here has continued its march to the upside, up 1.68% this week. Continues to defy gravity. Lots of volume coming in here. This multi-year breakout certainly in motion. It is very extended in the short term, but because we are breaking out of a multi-year highly watched level, this is something that is tough to want to fight in the short term. You can really get your you can really get kind of get a lot of pain inflicted to your account. I lost a good analogy there, but it's tough to want to short something like this that's breaking out of multi-year new highs. So be careful there. Not advocating chasing it. Just kind of, if you're in a position, trail your stop, protect your risk. But otherwise, this thing continues to climb at set new momentum highs today. So we'll see where this goes. But for now, gold bulls really enjoying this breakout to the upside. Now, silver here still kind of taking its time. We do have momentum highs being made here in silver as well. Good volume coming in, but you can see it's not really breaking out to these new highs here, and we're still kind of waiting for silver to perhaps play some catch up and really start to make some moves like gold has been. It is above $14. I do have a long position in silver right now. We talked about it in last week's video when we put it on this day here. So we continue to hold the long position. We're still looking for higher prices, and in fact, I'm fine with this kind of taking its time up here. Just don't want to see it give everything back and come right back to $14. I'd like to see the trend hold up and see the momentum build like gold has. So we'll see if we can get that. So far, it's holding tight and up and sideways, and we'll see if this can turn into a continuation pattern to the upside. Last but not least, if we go to oil here, oil coming back to that $12 area. There is some prior supply back from first, second quarter of this year. It has had a nice move off of these lows. MACD trying to go positive here. It's certainly a tough chase now that it's had a 15% rally off of the lows. It's still arguably in a shorter or intermediate term downtrend from April. So we'll see how this fares around $12. I think the test and the hard kind of road now is what happens here over the next coming days. Last but not least is natural gas. Got a nice pop here yesterday on Monday to start off the week. We're up 5% on heavy volume. Maybe that's some indication of a short-term bottom put in, maybe even a long-term bottom. I don't know. For now, I would say the evidence is still to the downside as we have all major trends pointing lower here for natural gas. The big relevant level this would need to reclaim back above would be about 2150. So that is, about 10% above where we're currently trading. So for now, we can enjoy the bounce. If you're tactical, maybe you're still in here looking for more mean reversion. We got some positive momentum divergence on these new lows. We got some heavy volume coming in. We got this sharp gap up that's trying to hold. So again, if you're short-term and active, maybe there's some opportunity here to the long side, but just remember the longer-term trends are downward, so don't overstay your welcome. Just pay attention to those rules and risk management. So that is it. That is what I have for the midweek video. Remember, no weekend videos for the next 2 weeks. I believe in you guys to navigate these markets, and I will be back in a few weeks after that. So again, have a good holiday time off. Enjoy the good weather that's coming around, and I'll see you on the other side. Remember, subscribe to our YouTube channel if you like the videos, and thanks so much, as always, for tuning in and watching.